Will we learn anything that might surprise, frighten, concern, worry us about the GDP data out of China?
Well, I think when it comes to Chinese economic data, there will be something from all of the above, depending on your viewpoint. Bulls and the bears will always take something from it. It's certainly a big day tomorrow, though. We get the ultimate health check on an economy with the GDP numbers. There's all the scepticism around China's GDP numbers, and some of it's quite legitimate. But the broad story is expected to be that the world's second biggest economy had a pretty good year last year, and Premier Li Keqiang has already hinted at growth at around 6.9%. So a kind of a stable backdrop seems to be the story right now, something of a sweet spot. The indicators that we get tomorrow will be much more forward-looking, like you say, the industrial production and retail sales and the like. Backstory is credit is slowing in the economy. The big question, the big debate is just how, by how much can credit slow before the real economy starts to feel a real pain. So far, it seems to be managing that pretty okay. So if we see a big slowdown in the IP numbers tomorrow, and indeed in retail sales, that could set some alarm bells that China's in for something of a slower year.
A lot of chatter about the renminbi recently. We've seen onshore today it's at 6.4335, offshore 6.4328. Against a basket of currencies, it's been a lot more stable. What is China doing with the currency?
There isn't a lot of transparency around the exchange rate regime in China, in truth, so it's very difficult to pinpoint, what exactly their priorities are. But I think, broadly speaking, like you mentioned, it has been stable against the basket, which is important. On the all-important, politically sensitive cross, of course, it's been strong against the dollar.
And to that point, does that mean imports and exports will change radically?
Well, it certainly means that it's something of a headwind for exporters, but the global backdrop has, of course, been providing a lot of stimulus and impetus for Chinese exporters, so they've been getting away with it. But if there was to be a scenario where global growth was to slow dramatically and exports slow, and the yuan stayed strong and the dollar stayed weak, then who's to say there wouldn't be a temptation among policymakers to let it weaken a touch? But China hasn't been playing that game, I think, for a couple of years now. They've been looking for stability in the exchange rate, for sure, but the idea that they've been pushing it to get weaker for a competitive edge, I think, is diminished somewhat.